Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, today we're going to be looking at a couple of altcoins. We're going to be looking at ADA, Cardano and XRP that we have here in front of us. But before we begin, do you want to learn Elliott Wave theory? Well, if so, consider joining the Green Star Trading Patreon at either Tier 2 or Tier 3. You will unlock this 11-part series, which is a comprehensive yet easy to follow video format, teaching you everything you need to know about Elliott Wave theory. Well, maybe you want to learn how to chart the way I do as well. Well, I have a series called My Chart, which is an ongoing series which I'll be adding to every month over the coming months, which covers exactly how I set up my chart on TradingView, every tool I use, every drawing I use, every object, every indicator, the whole lot. And we'll show you how to set it up the way I set it up. You don't have to do it this way, of course, but if you're interested, there'll be a dedicated playlist to this too. And finally, maybe you just want to learn how to trade the way I do with my technical methodology, using what I call the standard trade setup. There's a playlist here for that too. We also cover things like trading psychology and risk management. If all of this sounds good to you, then you can unlock all of it by clicking on the link in the description box below, heading over to the Green Star Trading Patreon page and joining Tier 2 for £10 a month. By doing so, you will unlock all of the playlists I've just shown you, as well as a whole raft of other educational content. You'll also get access to the public Discord, where there is a myriad of channels covering multiple subjects, which can keep you engaged and in discussion with all the other members of our community, including myself. I also host weekly live streams which can go on for hours at a time, where I'm happy to take suggestions and cover anything anybody wants to look at, as long as they make the suggestion in advance. But if all of that isn't enough for you, then maybe join Tier 3, where you get every single benefit I've just listed, but you'll also get access to my monthly dividend calendar and stock rating system. Finally, if neither of these appeal to you and you just want to support the channel by donating £5 a month and appreciate the work I'm already doing on YouTube, you still bag yourself an exclusive video each week. Thanks for listening, guys. We look forward to having you on board. Now let's get back to the video. Okay, welcome back, guys. Just a quick word about the Patreon. If you do want to sign up, now is the perfect time to do it. It's the start of the month. You will get a full month's value for your subscription, giving you a good 30 days or thereabouts to consume all of the educational content, such as the Elliott Wave series and My Chart series, which is now on its 6th episode. I'll be putting out a 7th this month as well, and also the trading series, and I'm always adding new videos and content, plus access to Discord and and everything else as well. So and you'll get to do all of that before making the decision whether to roll over your pledge into next month or delete it before the end of the month. Okay, so like I said, I always encourage people to sign up at the start of the month because I want people to get maximum value for their subscription. Okay, everybody. Right, now before we begin today and get into XRP and the ADA count, I just want to have a quick word about Elliott Wave theory. And I come across comments on the YouTube section sometimes, and they do infuriate me a little bit, to be absolutely honest with you. I just want to make the point that your primary account could be wrong and your alternate account could be right, or vice versa, or whatever, and it doesn't matter, you can still be profitable. Okay, because first things first, Elliott Wave is subjective. Two people can be following the same rule set and see two completely different things, and there are varying rule sets within the structure of the definable rules within Elliott Wave theory anyway, so you could even end up in a disagreement with one another. There are two kinds of people in this world when it comes to trading: those who manage risk and are profitable as a result, and those who care more about proving other people wrong. The second group, if you're a budding Elliottician and you're learning and you're practicing the skill and you're getting better, please try not to be disheartened by these morons. Okay, because they're pathetic. Okay, I have a system which we share with our Discord members and our Patreon members, which gives you a way of managing risk, and that's all trading is. It's managing risk, setting clearly definable structural risk. That's it. And in other words, so and so on the internet said that we are in such and such in an Elliott Wave count, and therefore I'm going to do this. That is not a way to run your affairs. And if that is your approach to trading, for God's sake, please stop before you wreck yourself. Okay, that is not what Elliott Wave is for. Elliott Wave is a tool which complements a multitude of a giant toolbox for a trader. Okay, if you want to drill a hole, a hammer is no good. If you want to hammer a nail, a drill is no good. So to those out there who are still learning and practicing, don't be disheartened if you're wrong. You will be wrong frequently. You are a human being, but that's got nothing to do with good risk management. That's down to you. Okay, you set clearly definable, clearly measurable risk. You take the count combined with all your other technical data, and you make the decision as best as you can. And if you're wrong, the market will stop you out. Okay, people come at you saying you're wrong, it's ABC, it's this, that, and the other. Ignore them. These people who are wasting their energy on such things, they are wasting their time. All right, just ignore them. Focus on improving your skills. Focus on improving your risk management, because that is what's going to reward you long term. So that's it, guys. I just want to make the point, which is right or wrong, it doesn't matter. What matters is managing risk. So it's easy to say, more difficult to do. I know. I've been at this for years. Okay, years and years. So I know. But I just wanted to start by saying that, because even I, after years of doing this, get a little disheartened sometimes when people come at me on the internet going, well, that was wrong, Tom. It's like, well, what do you want from me? You know, what, you want 10 points for proving it? There you go. Have your 10 points for proving Tom was wrong. Now fuck off. Okay, because you're neither use nor ornament to me. Alright? Because what has that got to do with how you manage risk on your trading account? So that's all I'm going to say. So now let's move on. I'm sorry for swearing and getting a little irate, but I just get irritated with people who seem to have their priorities completely out of whack. We only have one priority as a trader, don't we? That's to make money. Right? And how are we going to do that? By managing risk. That's it. Now, I have a video about managing risk from a technical point of view. I have a video about advancing a trade and moving the stop over time and using the standard trade setup. All of that's available on the Patreon, on the Discord, you know, for 10 quid a month. If you want to learn how to do it, you know, subscribe. And but if you want to bitch about it on the internet, on the YouTube comment section, for example, or even so far as emailing me in some cases that people go to, because you were basing a decision on a count that I had some time ago or something, I can't tell you anything other than, for God's sake, stop doing what you're doing. Because if you're not going to take responsibility for your own actions and you want the palm of blame off to some Elliottician's count from months ago, you're not a responsible, logical or sensible human being. You're not managing risk. In fact, you're a fool. You're a bloody fool. Okay, so I'm not going to get any more irate now. I'm just going to leave that there. So, like I said, don't be disheartened. Stick with the work. Manage risk. That's it, guys. Okay, so now I've got that off my chest, let's begin. Yeah. In an ideal world, I wouldn't have to say this is not financial or trading advice, because people would understand that, but that is not going to end anytime soon. So let's go through the counts first. We'll do our basic technical analysis as well and look at all the other indicators and stuff. We're just going to go through the counts first so you can see how things have developed over time. And I've also got quite a radical count. I consider it quite a radical count to share with you on XRP. I haven't seen anyone else come up with this idea yet, so if it goes right or wrong, okay, let's not go back down that road. It would be very interesting from an Elliott Wave, from an Elliottician point of view, if it played out, purely because it would be an interesting pattern to watch play out. Right, let's put it like that. So that is not this count. This count is the nesting structure count, and this goes back donkeys now. This goes back ages. So let's just talk our way through all of the issues we have with this one. 5 waves up, expanding flat, zigzag, no overlap of the 4 over where the start of wave 1 was, into a primary 1, into a primary 2. 1, 2, 3, 4, 5 minor waves up, 4 completion of the triangle, not overlapping price 1 territory, into intermediate 1, into intermediate 2. 1, 2, 3, 4, 5 waves up into minor 1, W, X, Y, X, Z into 2. Now we're about to pop. All this Z's going to come lower, and the 2's not finished yet. This is a nesting structure. 1, 2, 1, 2, 1, 2. Now when I say the 2 here can come lower, it can only come fractionally lower. It can only come fractionally lower before it's invalid. So let's put that first things first, let's put that multiple invalidation point up. And this is 0.50969. Okay, go through this. This counts wrong. Okay, because this pivot here, we can't go 1 and 2 come back beyond this point. This is the invalidation point, 0.50969, and we're only a few cents away. Now, if we get an STS out of here, and we get momentum, and we get a 5-wave impulse and 3-wave pullback, and we get a perfect setup, we get a golden zone retracement, we get a nice placeable pitchfork, we get positive momentum and volume coming in to support this, we break the downward trend, and everything looks awesome. Now you can talk about managing risk and setting up a trade off of this. Okay, just reiterating the point. So if we see that, then we can maybe look at this count being correct. Right, and if we break this invalidation point, it's wrong. So now that we've done that, let's move on to the next count, which relies on this same invalidation point. Okay, so this is going to help us in multiple ways. Okay, now, bear with me one moment. Actually, no, we'll come back to the other count in a minute. I want to share this one with you first. I first shared this idea months ago on the Discord, and was kind of hoping that it would resolve itself a lot faster, but it hasn't. It's meandered, and that's made it a little time consuming, but it's still here and it's still alive. So let's talk about this one. This is an expanding leading diagonal where we have ABC into 1, 2, ABC into 3, 4, ABC into 5. Okay, series of 3-wave structures, which I prefer to see in a diagonal. Just my personal preference. You can have 5, 3, 5, 3, 5 in a leading diagonal. I just prefer to see zigzags. In my mind, it helps the overlapping structure make more sense. But anyway, getting back to the point, this is a wave 1, and now we're coming down into a wave 2. Now the issue I have here is the 4 retraces into wave 1 territory. That's expected, and that's a prerequisite, right, for this diagonal structure. However, it gets within a gnat's cock of invalidating the wave 2. I mean, it gets so close, but it's still legal. So what I kind of say to myself here is I put the chart into line and I say, well, when we consider the closing price only and not the intraday pricing here, we can see how it's actually nowhere near as severe. Well, okay, that was the wonkiest line ever. It's nowhere near severe, right? So I can talk myself into this one. I can see a zigzag here, zigzag here, zigzag here, zigzag here, zigzag here. So I can talk myself into that one, right? But like I said, from a where price went point of view, it was awfully close to invalidating, but it didn't. So here's another count. So we are in log scale at the moment. Let's have a look at what we've retraced overall. We haven't quite made it to 50% in log. I think we're approaching 78.6 in linear. Yeah, we are. We're not quite there yet. So we could be done with W, X, Y, X, Z. Series of zigzags again. Right. This is not 5. This is definitely 3. This is definitely 3. This definitely looks like 3. This definitely looks like 3. And this definitely looks like 3. Okay, so hasn't pushed price much lower, which is a little peculiar for a triple zigzag, right? We want to see that Z. So maybe you've got looking for all this structure down here, physical supportive structure. So you've got these highs, these highs, these highs, these nuts, and then that's going to provide structural support at the 89% retracement. And we're going to go 1, 2, 3, 4, 5, A, B, C, and get another zigzag down here, finishing our zigzag down here around 30 cents. Right. Like I said, if we come out of here impulsively, we can change our mind, and we can look to enter a trade there, right? But it would make sense, I think, that the zigzag, the final zigzag, pushes price lower. Right, that's kind of the whole point. So coming back to the 89%, that 30 cents level. So I was in too much of a hurry really to switch that off. Then we'll mark that, and I'll put it as to go with this count because I feel it makes the most sense. So I'll say that's the 89 fib. hide this out of the way now. So we've got a price level down here. I'll lock that in place. So this represents the 89% retracement at linear level, and it also represents a whole bunch of structural support, doesn't it? Just bring up our VPRN. Why do I always say that? VPVR. This is coming from something. I think it's because of all the VPN adverts that get advertised on YouTube. My brain just hears that V and whatever. We come into some volume down here, right? And the profile is nowhere near our point of control, which is all the way back down. Oh, it's not a million miles from. It's all the way back at 20 cents. But we come into something. We come into some structure down here. Okay. Like I said, you've got all of this noise down here. Highs and lows, support, resistance. Right, so we've got a level to look there. And I'll just tag this and say 89% retrace. And we'll throw all of this into this expanding leading diagonal count. Okay, so there's the next idea. So shall we move on to what's behind door number 3? So this is the more radical count. Okay, so drum roll. Multiple invalidation point. I've just lost where it is. There it is. Okay, so there's a couple of ways of interpreting this, but let me just talk you through what I'm saying here. Okay, now we're looking at this not from March 2020 low. We're looking at this from January 2018 high. Okay, and what we're saying is that we've got a zigzag structure, in this case a double zigzag, into a W as a 3-wave move. We then have 5, 3, 5 as a zigzag. Rather than trying to get 5 into here, or 1, 2, 1, 2, we've just got a 3-wave move. So we've gone 3 down, 3 up. Okay, we have not come back high enough to make a flat structure. We haven't made 90% retracement, hence why it's labelled WX, not AB. And then we've gone A, B, C, D, E into a triangle, and we'll come flying out of here. And on a larger time frame, this is a 3 into a 4. Now this could be primary degree, this could be cycle degree, it could be 1 into 2, and you say, well, you can't have a triangle in a 2. It's not a triangle. This whole thing would have to be a triangle for it to be a 2. It's a combination, and the second part of the combination, the Y wave, is a triangle. Now this is perfectly acceptable in combinations. If you go and read Elliott Wave theory by Frost and Pretcher, a zigzag into a triangle, a zigzag into a flat into a zigzag, a flat into a triangle, la 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 la, is all perfectly acceptable. Okay, and our identified structures. So let's have a look at a way of interpreting this which suggests it's already complete. So I've got this dragging out for longer, but what if it's already done? An alternate idea would be that the C was in here, the D was here, okay, and the E just came in. So I'm just going to remove this W. Now I've got the WXYXZ here because it fits in the C wave. The C wave tends to be the most complex of a triangle. It just fits nicely. But it could be, quite simply, A, B, C, right? A, B, C, and A, B, C. A, B, C, D, E, triangle, done. Y wave complete, rocket out of here. Right, now what don't I like about that? I don't mind wicks coming through the trend line of a triangle, but I don't like bodies of candles coming through a triangle. Right, that's something we rather avoid, because trend lines of triangle tend to be very well respected. So I can put it across the bodies here and see that we're not really coming back to it. Now I can live with that. Alright, that we have a shorter D here. We've spoken about the length of our D before on the channel, as embarrassing as that can be sometimes. But we see that we get a 50% retracement here. Right, not much in linear, but it is 50. It's enough. Right, however, we should accommodate the idea of it heading a little higher. Okay, and respecting that trend line more, and that's why the previous count I had, right, it's the one I would favour, I think. Now, like I said, you come ripping out of here in 5, we can reconsider. Could be part of a zigzag, or it could be something bigger. So I'm just going to move the C to here, okay, because you might say, oh well, this is a higher finish, Tom, than this. It's like, well, that's up for debate. This is all wicks. This is bodies of candles finishing lower. These are closes finishing lower, so that's up for debate. Now, there could be another move lower to get the C down here, right? As long as it doesn't go beyond this multiple invalidation point, 0.5069. This is the invalidation point for this, as it is for the nesting count we looked at earlier. So, let's just leave this intact for the moment, and let's bring back that complex count with W, X, Y, X, Z in the C. We'll get a zigzag in here in the D, and then we'll come back in the E. Okay, and we'll complete whatever this is, maybe out towards the end of towards the end of the summer, start of the autumn. If we've got 2 more swings. If we're done, we'll be on our way out already, and this will be a violent move up. Doesn't appear to be any volume coming in at the moment, though. Alright, so still a little weak coming out of here, but we'll wait and see. So there's your multiple invalidation point for that. And this is the count I consider a bit more radical, because I don't think I've seen anybody else consider a double zigzag into a triangle combination from the 2018 high. So this is a way of getting a Y wave to finish significantly higher than a W because of the triangular structure, without having to get a lower WXY overall. So it's not something that you tend to see very often, but it's a perfectly legitimate idea nonetheless. So there you go. To sum up quickly the Elliott Wave point of view, we have the 12121212, which gets invalidated at 0.50969. We have our combination idea, which also gets invalidated at 0.50969. Right, and then we have our expanding diagonal, right, which does not get invalidated here and could go much lower, and doesn't actually get invalidated until 11 cents. Okay, so the way I would run this from an Elliott Wave point of view, not from a trading point of view, like we've already discussed entering a trade, from a Elliott Wave point of view, my attitude is wait and see what happens with this level. If this level breaks down, this expanding diagonal will become my best shot at a primary count and will be labelled and recorded as primary. I am completely undecided from an Elliott Wave point of view, so I have this invalidation point to tip me one way or the other. If we rocket out of here in 5, right, I'm going to be looking at this downward trend line, but the real limit at that point is the top of the wave B. You break that wave B at 1, I'll tell you what, let's add that into the combination idea, shall we? And then we've got another level to work with, haven't we? So let's put in a level here. Okay, and let's say, let's get it precise-ish. 1620. Okay, so get above this B wave and we can conclude that we finished here. Come out through here and it was over. In that case, any kind of retracement off the back of a move beyond this level, that's your entry to the long side. It could even be to back test the triangle, who knows? We'll see as it comes, but that's a nice problem to have to worry about, that one. Okay, so that's your level. If you come up here in 5 smaller time frame, it could be A into a B into 5 into a C for a D, zigzag down in the E. That's still possible. Break all this structure in 5, different story. That's bullish all day. We do that because there's only 2 counts that support it, either a completed combination here, combination completing in a Y wave triangle, or you're in your uber bullish nesting structure of 1 2 1 2 1 2, and we're finally into 3 or 4 3 4 3 or 4, you know, and going higher. So there you go. There's 3 counts for what's this one going to? Combination idea. That was it. There's your counts for XRP. Let's have a look at the technicals now for a minute. Come out to the day time frame. As I discussed earlier, point of control is way down here. Right, so here's all that price structure back in 2017. Here's the lows in 2020, and here's the point of control. Worst case scenario in a bullish case, of we come down super deep for a 2, and we've got 1, 2 expanding diagonal, and we hold this low, but we come all the way back to 20 cents, and we've gone 1, 2, 1, 2, and now we're flying. Right, but that could be painful for the hodlers, there's no doubt. But long term, still bullish. Volume still declining. Okay, ever since this move back up, declining, not looking particularly strong. Any kind of move off of the low here, and the more I look at this from a distance, the more it does resemble a triangle to my eye. So maybe that combination count's correct. But either way, we want to see volume come in. Alright, so back at oversold levels, 19.47 on the RSI. Yeah, really oversold at the moment. Maybe that's the bottom and we're going to bounce. Maybe we can come lower. We have come a little lower in the past. We've come down to 14.78 back here in the August low of 2018. So the RSI can always push a little lower. But we've come from overbought to oversold. What we do, or what I like to call a round trip. We've got, some evidence that maybe there's a triangle, but it's pretty shoddy. Really, no bullish divergence to speak of here on the day time frame. Just come to the weekly. Okay, so we're not back at oversold on the weekly yet. We got into oversold conditions in the March 2020 low. We could have another thrust down into that low, bring us back to this point of control. That could get us deeply oversold. MACD's trending lower, lower lows, lower highs on the weekly, high, lower high, lower high, low, lower low, rolling over again, average through the signal, red bars appearing on the histogram, looking pretty bearish, pretty weak. I would always say, however, and take this as you like, it's always darkest before the dawn. Things always look bearish as hell right before they turn around. That's what a bottom is. Strangely enough, that's exactly what a top is as well. Things always look bullish as hell before things turn around, and normally the crowd will be screaming that one way or the other. So everyone's bearish as hell and says it looks awful, all it can do is get worse. Chances are you're probably not far off of the lows. Whereas when the moon boys are out in force, and we're on our way to Pluto rather than the moon or whatever, which is a planet, don't care if you disagree, then, because I was told at school, that's a fact. But either way, it's then when we're at our most uber bullish, but it's likely the top of the market, isn't it? Okay, so let's bring up our moving averages here. Weekly moving average 250. Let's bring up the others. Excuse me, got a bit of a tickly throat. Weekly time frame, coiling the moving averages together, kind of triangularly, as I've often pointed out before. You tend to see in a triangle when we start to coil together like this. 10 and 20 through the 60, below all three of them, still off of the 250. Could be a potential lower low in the WXY idea. I'm saying the 1 into a 2 with the WXYXZ for a corrected 2 could bring us lower to test that 250 weekly moving average. On the day time frame, just below everything. Once again, all the averages coiling together on the day time frame. 250 acting as major support and resistance. Okay, above it here, testing it here, resistance here, resistance here, resistance here. Right, rejection, rejection. Alright, and that's the scene of the basic technical analysis. So yeah, it looks bearish, but we are massively oversold here. A pop from here wouldn't surprise me. Does it translate into an impulsive move? We want to see volume and momentum shift positively to support that. We want to see an impulsive wave out of here. Or does it translate into a temporary correction before crashing lower? Well, we could always get lower on the RSI. We can always drive lower on the MACD. We've seen it in the past. So that's XRP. I'm going to save the chart there. And now we'll come over and have a look at ADA. Okay. Now this, I will timestamp this video because it's turning into a pretty long one. Right, so let's come over to the ADA chart. Right then. I only have one count at the moment. Where it finishes is up for debate, but I only have one count. So this is the chart, daytime frame in linear scale. I don't think it makes much sense looking at ADA in linear scale. We don't have the same long-term sideways correction as we are in XRP. We have a clear impulse to a higher high. Right, so that's how we're looking at it. So I'm not sure why it's not there, but there's a... Is that it? No, that's a separate impulse. Don't need that. Bear with me one moment while I get my life in order. We're just missing our 1, aren't we? 1, 2, 3, 4, 5. Primary degree. And stick this into the bullish long-term count. That's that. What is this? Part of that corrective count. Put that into that new corrective count. Okay, that's the corrective count I had prior. Okay, so I didn't look at this for a long time. I did an exclusive on ADA, and I'm always happy to look at this in a live stream. Whoever requested this on the Discord, if you want to put this into the live stream ideas channel, I can always find 10 minutes to do a quick look at it, or a little bit longer on this week's live stream. You know, if somebody's got some ideas they want to share, people often do. So what am I looking at here? I'm looking at 1, 2, 3, 4, 5 waves up into a 1. Now I love everything about this impulse wave, I really do. The way the candles close and intraday pricing on ADA can make putting Elliott Wave counts at smaller time frames practically fucking impossible. So don't stress over it, do the best you can with it. Advice to budding Elliotticians. But long term, structurally, the bigger moves looks really nice. So let me show you what I mean here, right? So we get here's the peak of our volume. What? Okay, that's the wrong tool. We get the peak of our volume here. Alright, which is when we've gone 1 and we've gone into 2, and then we start our extension into the 3. Right, which completes here. Right. And this is when all our volume is really taking off. Strong volume into the 1 anyway, even stronger into the 3. Okay, if we look at our highest peaks on our RSI, it's in the top of the 3 here, the third wave. And if we look at the highest peak on our MACD, it's actually at the completion of our wave 1 here. But I think it actually comes up in the 3 of the 1. So we see increasing momentum to the high, strength in the 3, volume in the 3, you know, and a little bit of like a strong push into this final move. All of that looks really motive. It looks really impulsive. It looks very believable as a 5-wave structure. So that's all groovy. All of this move down, is the meandering correction, right? It's all been on lower volume, and we've gone from trending above the red line here, the 70. See, all these bullish peaks, all in this 3 above. And then coming back to 40, back to 40, back into 40, 70, 70, 70. You see how drawing this wave 3, there's like nothing's coming down into oversold at all. This is so classic of a wave 3 on a larger time frame, that we just trend bullishly in the RSI above 70. 70 back to the 40 zone, 70 back to neutral, 70 back to neutral, 70 back to neutral, breaks down below neutral, pushes back above 70, then we break down into oversold. Then one last thrust into a overbought condition. Wave 3 into 4 into 5. 3 into 4 into 5. It just looks really nice. Momentum supporting it, volume supporting it. Now you get a bearish phase, right? Where we can't get ourselves above the 70 unless it's a major pivot. But we can stay trending in the oversold zone for a long time. Oversold. Back, oversold, back, oversold. You see, so it's the opposite of the bullish phase, which is when we're in this strong bullish condition, not visiting oversold. Now we're in oversold, not visiting overbought, apart from this recent pivot. So we need to interpret that. So all of that has me totally assured, because I was asked the question, have I dumped my money long term? Because we've all done it. Okay, we've all been trading at different levels of experience for years, some of us for months, some of us for decades, right? and we all throw our money at an idea occasionally, and then sit back and watch it just fucking implode, and sit there thinking, "Oh my god, have I thrown money down the drain here?" My opinion is absolutely not. You haven't, and it's just my opinion. If it turns out to be wrong, and you come back and point it out later, you can have your 10 points. But either way, 1, 2, 3, 4, 5. Everything supports the idea that it's an impulse. Everything's falling off here. Weak price action with weak momentum, with weak volume, suggests that this is all corrective. So 1, 2, 3. Doesn't matter how terrible this correction gets, we will take out these highs, in my opinion, and head considerably higher over the long term. So you can rest easy, but this is not financial or trading advice, but in my opinion you can rest easy that you haven't thrown your money down the drain here. It's just a matter of time until this turns around and rewards you for holding it. In the meantime, we wait for price action to support a trade to the upside, or if you're a long-term holder and you don't want the hassle of trading, right, you just keep accumulating as it comes down lower. You do what makes you happy, son. Right, so let's save that there. Now let's talk about the price action here from an Elliott Wave perspective. Just check something. There we go. Right, so interpreting this, like I said earlier, when you look at these candles, they're just horrid. Right, huge up and down volatility all the time, and it makes counting this thing an absolute bitch. I don't know why ADA's like this, it just is. It's by no means the only crypto I've seen with candles like this and price action like this. So it just causes problems. So I would argue, in this situation, take it easy on yourself and put the chart into line and see what you can see here. Okay, so what I've got here, let's bring up the correction, new corrective count. I can see 5 down into A. Right, I can then see a 3-wave swing into a B. I can then see 5 into C. A, B, C. This is a zigzag. So we'll mark this up as W. I then see A, B, C flat pattern, expanded flat into an X corrective structure. I then see what I'm thinking is a diag. Now it could be an impulse, right? But even though I'm paying lip service to it, I am trying to accommodate to some degree the wicks here as best as I can. I'm just making it easier, so I'm not cheating, I'm just trying to make it easier on my eyes to make sense of it. Okay, 1, 2, 3, 4, 5 diagonal. Now could you be possible to get A, A, B, C, and this is a diagonal in the C, and we're coming out of here 1, 2. Not anymore, because we made new lows, right? So we didn't complete it here. Whatever it was, we didn't complete it. So that makes me think that this is diagonal A, B, and C to come, with maybe a 1, 2, 3, 4, 5 to come down. That's the best I've got from an Elliott Wave point of view at the moment. Okay, so let's just look at this in linear now for a minute and throw up a regression channel. Right, let's bring up the candles again. Full screen. We are trending lower. Alright, and we are relatively respecting this regression channel. Now, like I said in XRP as well, you come flying out of here in 5, okay, and back in 3, there's a potential trade. You've broken a downward trend. Is it supported by volume? Has momentum shifted positively? Have you got a nice golden zone retracement? Do you get a reaction off of it, continuing the trend? So on and so forth. All these things we use to manage risk and set up a trade. Right, then we can talk about having had a bottom here. Right, but for the meantime, I would suspect that it's going to come lower. So where is it going to come to is the next question. Well, we can take a few guesses. So let's come to our log chart again. First thing that sticks out to me structurally is this point of resistance and this point of resistance. This gives us some structure. Now it looks extreme in log, But let's just remind ourselves how it looks in linear. It's right down here at the bottom, right? Now what we find, if we look at that, and we bring up a fib retracement for a minute. Right, I'll just zoom in, make sure that's placed accurately. I nailed it. Right, so log scale not even through the 50 yet. In linear, we're at the 78.6. Now, what do we notice about the structural support I just pointed out? Okay, in amongst this noise and in amongst this noise back here. Here's the 89% fib. Again, comes back to test the median line of the regression channel. Finds 89% retracement for a wave C. Doesn't have to come this deep. It could come to a 78.6 and find support here, but there doesn't seem to be much reason to do that. Now, if we look at it here, we can see some support in the volume profile, right? Some tradable volume. That's this here, this pointless 3-4 back here in this large account. So let's label this and say, you know, this area here. I'm going to say the 89 as a guide. And lock that in place. This is a potential area of support down here, 363. Lock that in place. So I see that there. I see structural support coming back there. Now, could it go lower? Of course it could. It can always go lower. Next area of support and resistance is, you got a whole big beam of it here. Lows, lows, highs, highs, lows, highs, highs, lows, highs, so on and so forth. So there's just this huge chunk of support here. It's more of an area than it is a specific line, and that's basically between, what's that, 7 cents and 12 cents. Right? Long way down. Long way down. In linear terms, it's a 99 point something percent retracement. In log terms, it's a golden zone to 707 retracement. This would be just a biblical collapse. Now, I'm not going to say it's impossible, because if this is a 1, it could be an extremely deep 2, calamitous 2. But it doesn't have to be anywhere near that bad. Okay, in linear terms, this 1, 2 to the 89 is plenty. We could even find support prior to that at the 78.6. We could turn around now, but we have to observe those things before we make a decision. Okay, so there you go. That would be, I'm not going to worry about that for the meantime. We've got support here, structural support here, and the 89% retracement in linear, somewhere between 36 cents and 41 cents. Just gonna have a quick drink. Okay, but as I pointed out, we don't have to come that deep. Just feels like for as long as this continues in this downward trend, in this WXY pattern, then for as long as this continues, we might as well keep trending lower. However, now let's have a look. We've looked at the RSI and the MACD over the longer term already. Back into oversold conditions, about as extreme as it gets for ADA. The most extreme reading was, once again, March 20 lows, which was around 13 or 14 on the RSI. We're not that low, so we could come deeper. Rising lows on the MACD. So there is some underlying, I wouldn't say bullish momentum, but there's weakening bearish momentum under this price. Now we can see that makes sense with the constantly declining volume, right? The sellers aren't having to do much to push the price down, but they're not really here in force. This is much more about a lack of buyers, a lack of strong buyers, big whales coming in to buy, right? This is a sign that bearish momentum is weakening, but by no means dead yet. This could all drive lower, right? But we are in oversold conditions, so some kind of temporary bounce could well be on the cards. Could be big impulse out of this trend, looking strong. Could just be a temporary bounce before heading lower, similar to XRP. But long term, 1, 2, heading higher in a 3. Okay, now let's have a look at our moving averages here as well. Let's clear up the chart a bit. if I stick all this in one place. There we go. Right, trending below the 10, the 20 and the 60, all heading down. 250 curving downwards, price below all of them. It's about as bearish as price can really look from a moving average point of view. From a weekly perspective, we don't have a 250 because we don't have enough price data. Okay, but we know we tested the 60 here and here and are still below them. Volume still dropping off, still bearish, still looking weak, so on and so forth. It's basically just got a hell of a lot to prove at the end of the day to get itself out of this circumstance, to get itself out of this mess. But when it does, it will. You know, and like I said, I think it is overall bullish. Now let's have a look at, let's take a pitchfork for a minute. And let's have a think about how this looks daytime frame wise. I won't hold the drawing, that's so annoying. I just repositioned it. Let's try that again. I'm just thinking, dangerous I know, that this may have been a median line back test here. Come back up, test the median line and see if that lines up with the idea that we're heading lower. Put it in that one. That was it, sorry. So let's line this up with the 89 for a minute and see how it looks. Essentially, this whole thing would be 1 into 2. So whenever this stops, and it could have stopped here. Right, I'm just trying to see, like, given the structure, look at all these lows here in this triangle. So you could argue that if you're trying to get some kind of structure to line up with the pitchfork, we can't place it until we've actually got a pivot, but I'm just theorizing. You have got an 80% probability, if we came to that golden zone, which is like miles away, of making the median line, which I think would take you to new highs anyway. That's like the worst case scenario, that we come down all this depth, but then we are going to go significantly higher. If we finish before then, we could finish at any time. We just need to see an impulsive price. We need to see an impulsive move out of it, and then we're likely in a free heading for the top of the pitchfork. Right, could even overthrow it. All of this could become a base channel, and we could just go to the moon. If you know what I mean. You take the. Well, we'll talk about that as and when. In the meantime, it's still got a lot to. It's still got a lot to prove. It's got to get out of this downward correction. I think it wants to head lower in the short term. To be honest. Could get a bounce from oversold conditions, but for as long as this downward trend holds, I think we're looking for lower pricing. And then once it's over, that's our wave 2 complete, bullish count, and you know, we're laughing after that. We're just going to the moon. Alright, in my opinion, and that's all it is. Alright guys, that's all I've really got to offer you today. I hope I haven't missed anything important. But take care of yourselves, and if you like what you're seeing and you're new to the channel, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. If you are a Patreon subscriber, thank you massively for your support. It's greatly appreciated. If you're interested in becoming a patron, head over to the Patreon page following the link in the description box below. Have a read of the different tiers and see if there's anything you're interested in. If you are, for example, more of an investor and a hodler, I have tier 3 as which provides my monthly dividend calendar and stock rating system as well, of which there's like 20 plus X dividends up this month. If you're more of an equities investor, you could have a look at that. Whatever. And if you're not following me on Twitter yet, please do so, as I always post an update whenever I post a new video. Alright guys, take care of yourselves, and I'll be back with you later in the week. All the best. Bye bye.